All right, today we're going to connect some dots that might not seem connected at first glance. What's happening in conflicts overseas, the rising price of oil, and, most importantly, the money in your own wallet. We're going to break down how these things are all tangled up and what it could mean for all of us in the years to come.
So let's just dive right in with one number, a single number that's causing a whole lot of nervousness in the markets right now. And that number? $84. That's where the price for a barrel of crude oil has pushed past. Now, in the world of economics, a number like this isn't just a number. It's a huge signal that the ground is literally shifting beneath our feet.
So you gotta ask, what's really going on here? Is this just a simple case of supply and demand, the usual stuff? Or is there something much, much bigger at play? Let's dig in. To really get it, we need to zoom out to the global stage. Because the answer isn't just about oil production or shipping lanes. It's about a driver that's as old as markets themselves. Plain and simple, fear.
And this, right here, lays out the playbook perfectly. You see, the goal here isn't just a military one. Not at all. This is economic warfare. The idea is to create so much fear and uncertainty that it puts maximum pressure on the markets. The goal? To shake up the entire global economy and, ultimately, to force everyone to the negotiating table.
And you better believe the market is listening. When there's talk about applying overwhelming force, traders and analysts hear one thing: more pressure is coming, both militarily and economically. The market is basically bracing for impact. It's pricing in the very real chance that things are going to get worse before they get better.
But look, it is so important that we see beyond the next news alert on our phones. This isn't just about a volatile week on Wall Street. We really need to zoom out and think about the next 5 years, because the chain reaction that's starting right now, it could have some serious long-term effects on our personal savings.
So this brings us to a really crucial point. There's this timeless economic pattern that rears its head during pretty much every major conflict in history. It's kind of a hidden cost of war, and it affects every single one of us, no matter where we live.
That pattern has a fancy name: monetary degradation. But all it really means is that your money starts buying less and less. It's not some new theory, it's just a predictable consequence. When countries have to pay for huge military campaigns, the value of their money is always at risk. And you can see how it works, right? It's like a line of dominoes. A conflict kicks off. Boom! Defense spending goes through the roof. To pay the bills, governments issue mountains of new debt. And what's the end result of flooding the system with all that new money? The value, the actual purchasing power of that money, goes down.
And that brings us to this idea that feels totally backwards. Our gut instinct in a crisis is to run to cash, right? We think it's the safest place to be. But if the value of that very same cash is being systematically eroded by all this spending, well, holding on to it is a guaranteed way to lose your buying power. So this really sets up a clear choice. On one side, you've got cash savings. Yep, they're liquid, you can get to them easily. But they are a sitting duck for the very inflation we're talking about. On the other side, you have tangible assets. Now, they might be harder to sell tomorrow, but they have real substance. They can hold their value or even grow while the power of cash is fading.
Okay, so if cash isn't the safe harbor we think it is, then what's the move? What's the long-term strategy to actually protect your savings and get through these uncertain times?
Well, the analysis points to a pretty straightforward 3-step strategy. First, try to minimize the excess cash you're just holding on the sidelines. Second, look to invest in businesses that are profitable and actually produce things of real value. And third, seriously consider tangible assets, things that have a track record of storing value when currencies get weak.
So what are we talking about when we say tangible assets? Think about real stuff, things you can actually touch. Real estate, people always need a roof over their heads. Agriculture, we all have to eat. Gold, it's been used as a store of value for thousands of years. And again, productive businesses, those are the engines creating the things we all need, no matter what a dollar is worth.
And all of this really leaves us with one final big question to think about. In a world that seems to be getting more and more unstable, where is true value really found? Is it in the paper money we carry around? Or is it in the real, tangible things that money is supposed to represent?